Good morning. The CPI came out this morning, and I wanted to do this ad hoc live. We had our market update with Megan Aller yesterday. I did my live on Tuesday. So what am I doing? I felt it was really important to tell you that the CPI did not come out as expected. And what does that mean for rates and the Fed? Because yesterday at our it used to be Friday, now it's Thursdays, our Thursday market update, when Megan and I were talking, I talked about the fact that the CPI was due out tomorrow morning, that I didn't have the number, but all expectations were that it was going to be flat. That didn't happen. We actually hit another high. So it did the opposite. Our month over month came up over 1%, and then year over year, that means that we went up 8.6%. So just last month it was 8.3%. The month after that, it had been a high at 8.5. And people were talking about the fact that had inflation hit its height, had it hit its top, is it reversing? Are things slowing down? Everything about this report is higher. And really, it's the what is this going to do to interest rates and what is this going to do to the Fed meeting next week that I want to spend just a few minutes talking about this morning so that you have this information as real estate agents, as home buyers going into this weekend, because time has become a little critical. We could see higher interest rates short term than we thought, because here's how the markets work. The markets operate on knowledge, right? Expectation of what things are going to happen. So if I'm standing back here and I think that the Fed is going to raise the Fed rate 50 bips this month, 50 bips next month, and then start to pump the brakes in September, and then they actually raise the Fed rate 50 bips next week, I feel comfortable with my knowledge that my expectation now meets the reality and the market stays flat. The fact that they go up doesn't mean that interest rates are going to go up, because I'm getting that question a lot. Will interest rates go up next week when the Feds raise the Fed rate? It doesn't work like that, right? It works more like on I expect them to and they do, so I'm good, right? It met my expectations. The reality met my knowledge or the thought of what I was going to have happen. So, what does today's information change about all of that? So I was listening to CNBC this morning, and Jim Cramer was going off on the fact that he thinks that the Fed should rip off the Band-Aid and raise the Fed rate a full percentage point, 1%. They're at 0.75 right now, so he wants them just to rip off the Band-Aid and just take care of it. I don't know that I disagree with that. I was listening to other economists this morning talking about the fact that they might jump it from 50 bips to 75 bips, or they might just take pumping the brakes in September off the table and just raise it 50, 50, 50, and then 25. So what does all of that mean? Well, now it's very possible that next week when the Fed meets, it no longer meets my expectations. And if that changes, then our interest rates change, because we like stability. Even if it means that the Fed rate's going up, I, as a bondholder or as a homeowner with interest rates and I'm looking to buy, any investor likes stability, whether it's good news or bad news. If I can count on it, then I can bet on it and I can place money in the stock market, in the bond market, when they don't meet expectations. So the CPI went up a full 1% month over month, 8.6% year over year. Let's just dive into this just for a second. Energy is up 3.9% month over month. Fuel is up 16.9%, or 107% year over year. Gas at the pumps is now over $5 a gallon nationwide. That is huge, right? I was looking out my window, I'm like, is it $5? It's $4.79 right here. So I don't know if that's the cheapest gas in town, but it seems pretty reasonable. $4.79. I don't know if that's a deal or not, but there it is. We're in Englewood. So there you go. All right, so gas is over $5. Of course, that ripples into everything else. It's going to ripple into trucking. It's going to ripple into shipping. It's going to ripple into manufacturing. It's already rippling into airlines. Airlines is up 38% year over year. Go try buying a ticket today, and you're going to see that. So travel has become more expensive. Used cars are becoming more expensive because of limited inventory, right? Those businesses that were buying new cars because business was great, those rental car companies, because travel is also becoming more expensive, those rental car companies are keeping their cars a little bit longer. They're not buying new cars or new leases quite as often. That is where a lot of the used cars come from. Limited inventory, we know what that does. That raises prices. Rent on this CPI came in at 5.2%. We know that's low. We know that rent is higher than that. It is dang near 15%. This is 10% off. So that means that this is going to continue to fuel inflation. And our 10-year with the news, it has been absolutely moving up. It went from 2.97, literally, as soon as that report came up, it's up at 3.15. That means lenders are repricing for the worse going into this weekend. And if the Fed decides that they do want to go over 50 bips, maybe they want to go to 75, maybe they want to go to a 1%, that's going to mean our interest rates are going to go up higher next week as well. So we have to watch this. Is this doomsday? This is not doomsday. Real estate is still the best hedge against inflation. I'll take real estate all day, even if it means I have to pay a higher interest rate today to lock in those dollars, to lock in that home price, because we also know that if the Fed reacts swiftly and if we do get ourselves put into a recession because that 2 and 10 year is starting to compress again, we've talked about a number of other things. Last week we were talking about there were some economic indicators that show that the economy is still spending, the economy is still moving forward, but it's moving forward a little bit slower. If we do push into a recession, we know that interest rates will drop, demand will spur, on limited inventory, home prices are going to go up. So even if you're going out this weekend and you're getting quoted higher interest rates, I'm telling you it's because of what's going on in the market. It could continue to get worse. I would go ahead and lock it in. When we hit that recession and when the Fed, after they finish doing what they're doing, the quantitative tightening, if we do go into a recession and those interest rates come back down again, you can refinance, right? So lock in that home price today and take advantage of home prices continuing to go up. There was an expectation survey that was just done. Zillow had published it. It was Pulsomics. They were talking about where do the top 113 economists and housing experts think that home prices are going. None of them said negative. Even if they saw a slowdown in 2023 where it dipped 1%. I've heard some people talking about the fact that we might have a 0% appreciation. Interestingly enough, none of the 113 said zero. They all said for next year, at the most pessimistic was at 4.2. So when you're looking at those numbers, we know that we're going to continue to see home price growth. So the longer you wait, the more it's going to cost you. Yes, interest rates are going up. Depending on what the Fed does next week, they could get worse before they get better. When they get better, we'll still have limited inventory, demand will spike, and home prices will go up again. That's a wrap. I just wanted to make sure that you guys knew, because yesterday we thought CPI was going to be flat. That turned its tail on a head spin. Of course, lenders are looking at repricing for the worse. We've got a lot to look at. And then going into next week, we want to really keep a close eye on what the Fed does. Of course, I'll be reporting that next week on our Tuesday morning live, and we've got our Saturday blog going out to real estate agents if you get that. If you don't get that, IM me. I'll make sure that you do get on our list. Otherwise, you guys have a fantastic weekend. Hopefully get out there shopping for homes and give me a call because I'm working. We'll talk to you soon.